All right, going over S-corp fringe benefits. We kind of covered fringe benefits in individual taxation as well as corporate taxation, but now let's talk about them in the context of S-corps. Fringe benefits are a form of compensation provided by an employer to their employees in addition to the regular base salary or wages. However, dealing with the specific context of S corporations, the deductibility of fringe benefits is subject to certain limitations based on the percentage of ownership held by the shareholder. Fringe benefits provided by an S-corp are generally deductible by the corporation as a business expense. However, certain fringe benefits provided to shareholders owning more than 2% of the company are treated differently than those provided to shareholders owning 2% or less. So this is a nice introduction. We'll see how this works as well. Fringe benefits provided to shareholders owning 2% or less of the company are deductible by the S-corp as a business expense, just like any other business expense. Examples here will include health insurance, life insurance, retirement plan contributions. Now, these benefits are not subject to employment taxes and are generally not included in the shareholder's taxable income. On the other hand, fringe benefits provided to shareholders owning more than 2% of the company are non-deductible by the S-corp. Instead, these benefits are going to be treated as compensation to the shareholder, and they are subject to employment taxes, including Social Security and Medicare taxes. Examples of these fringe benefits will include health insurance, life insurance, and car allowances, just a few examples to name a few. These benefits are included in the shareholder's taxable income and will be reported on their individual tax return. All right, look at this. Look at this. We are back to our tax forms. Now, this is the 1040, our individual income tax return, and we're talking about fringe benefits, so this is where they go. First step, the S corporation will calculate the value of the fringe benefits provided to the shareholder employee during the year, which is essentially that person who has more than 2% of ownership. The S corp includes this amount in the W-2 wages of the shareholder employee. The S corporation takes a deduction for this amount on its own income tax return, and then the shareholder employee reports this amount as wage income on their personal tax return. Now, this is typically going to go here on line 1, very similar to also just dealing with individuals, even if you're just a normal employee, and as we covered in our individual taxation lessons. All right, we got some examples here dealing with that 2% threshold. Examples on S-corp fringe benefits. Well, let's say that ABC Corporation is an S-corp with 4 shareholders. We've got John, Jane, Mark, and Mike. John, Jane, and Mark each own 2% of the company, while Mike owns 5% of the company. The company provides health insurance to its employees and also provides health insurance to John, Jane, Mark, and Mike. The cost of the health insurance for John, Jane, and Mark is $5,000 each, while the cost of the health insurance for Mike is $10,000. First off, we're going to deal with the fringe benefits deductible by the S-corp for shareholders owning 2% or less. Well, since John, Jane, and Mark each own 2% or less of the company can deduct the cost of their health insurance as a fringe benefit. This means that the cost of the health insurance totaling $15,000 will be deductible by the S-corp. Next up, fringe benefits not deductible by S corporations for shareholders owning more than 2%. Since Mike owns more than 2% of the company cannot deduct the cost of his health insurance as a fringe benefit. This will mean that the cost of Mike's health insurance, totaling $10,000, is non-deductible by the S-corp. Next up, taxable income for shareholders owning more than 2%. Since the cost of Mike's health insurance is non-deductible by the S-corp, it will be included in his taxable income. This means that Mike must report $10,000 of additional taxable income on his personal tax return. Now, in summary here, fringe benefits provided by an S-corp are deductible for shareholders owning 2% or less of the company, while they are non-deductible for shareholders owning more than 2% of the company, and any non-deductible fringe benefits are included in the taxable income of the shareholder who receives the benefit. Awesome. You're doing great. You're doing wonderful. Stick with it, and we'll get you through it all. Another example here. An S-corp has 3 shareholders who are also employees of the corporation. Shareholder X owns 50 shares, shareholder Y owns 75 shares, and shareholder Z owns 250 shares. The total number of shares issued and outstanding is 5,000 shares. The corporation pays health insurance premiums for all its employees and their families. Well, that's very kind of them. Thank you for that. The cost of family coverage is $6,000. The corporation here pays for family coverage for all 3 shareholders. Because the company paid for health insurance, which of the following amounts would be reported to shareholder X as their income? Obviously, that's structured kind of as a multiple choice question, but here we see the answer is $0. Now, if the shareholder owns less than 2% of the company, none of the premiums would be taxable. If they own more than 2%, then the insurance premiums paid by the S-corp are fully taxable. Shareholder X, we do a little calculation here, owns 1%. We say 50 shares divided by the total of 5,000, therefore has zero income. Note that shareholder Y with 1.5% also has zero income, while shareholder Z owns 5% and would have to declare the premium as income if the question had actually asked about shareholder Z. So here we are thinking about all the consequences if the question asked something different with the same information. Make sure you understand it all from all perspectives. All right. We are doing well, having a good time. Make sure you're stretching, going for a walk as needed, get that fresh air. You got this. It's a marathon, not a sprint. You can do it. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.